This is another very substantial hit for people with mortgages. Those on variable rate mortgages will see them going up by between 25 and 30 quid a month per £100,000 of outstanding mortgage.
In spite of UK's protracted housing crisis, fears of a crash have been raised by declining home values and a continued mortgage squeeze. 13 months straight have seen an increase in interest rate, and the Bank of England's most recent increase saw rates climb by 0.5% to 5%. Let's learn more about the problem. The Royal Institution of Chartered Surveyors reported that a renewed deterioration in UK home sales occurred last month, with inquiries from prospective purchasers reaching an 8-month low. Barratt Development's trading update mentioned an almost halving in first-time buyers' reservation year over year. Additionally, the estate agent Winkworth issued a profit warning this week due to a drop in business. In other words, the home market news is exactly what you would anticipate as purchasers get used to the new normal of significantly higher mortgage rates. Even though Barratt noted that demand from current homeowners was more resilient, the big decline has already begun. According to Moneyfacts statistics, the typical 2-year fixed rate has increased to 6.66%, a 15-year high. For those who have mortgage, this is a terrible news because housing prices are also beginning to decline due to the pressure on consumer spending. According to the most recent Land Registry data on home prices, the average UK home cost €286,000 in April, a decrease of €7,000 from the peak month of September of last year, when the price reached all-time high in May 2023. Halifax recorded in the first yearly house price decline since 2012, with price down 1% from the previous year. The value of housing in the UK is estimated to be €8.68 trillion, with a further €425 billion expected to be added in 2022. According to the research by the Real Estate Business Avails published in February, therefore, a housing catastrophe might have a significant effect on the overall economy. There have been various predictions made by experts that a housing crash may be imminent due to the falling prices. One real estate professional claimed that a crash seemed inevitable in light of the Bank of England's interest rate increase. A house crash is only a period of dropping housing prices, despite the concept sounding alarming. It could also be referred to as a pricing adjustment. It usually happens after a housing bubble, like the one in the UK has been going through lately. In a housing crash, there is less demand for home purchases, which may be due to rising property prices that are out of reach for many people, inability to make mortgage payments, or even inability to qualify for mortgage in the first place. When a housing market downturn can be regarded as a crash, there is no predetermined dollar amount lost or value percentage, according to independent housing consultant and activist Rose Greyston. It depends on affordability, which may vary across the nation. According to Greyston, a crash occurs when a significant number of homeowners are forced to sell their homes for less money than they would want. That housing market is distressed, and once home prices drop to a certain level, it is believed to refer to a crash. Will there be a housing crash in the UK? The likelihood that a crash will occur is rising. This year, it is expected that home value will continue to decline. In March, the Office of Budget Responsibility estimated a 10% decline in home values. But since then, interest rates have risen more quickly than anticipated. It should be emphasized, however, that the decline in housing costs follows a period of rapid expansion, during which time prices rose 9.5% in the year leading up to September 2022, when they peaked, as reported by the Land Registry. Rising interest rates have made it more difficult and less desirable for prospective home buyers to obtain a mortgage, leaving those who have mortgages struggling to make their payments and causing some lenders to withdraw products from the market. In addition to securing a 12-month grace period before homes are repossessed, Chancellor Jeremy Hunt negotiated a deal with banks that will allow mortgage holders to renegotiate their condition with lenders without having that change their credit score. According to Rachel Reeves, Shadow Chancellor of Labour, almost 2 million households will lose out on mortgage assistance. These circumstances suggest a possible housing crash. I think it's now very clear that we have entered a period of higher interest rate than we've seen in the last few decades, and that is going to have a big impact on housing demand and, in turn, on house prices. Rayston said, "I believe that in order for housing prices to accurately represent the current state of the economy, they must be corrected. It's challenging. There will be suffering because we have been living in the bourgeois, erroneous world in which politicians, economists, and the general public have all taken part of the idea that prices may rise indefinitely. Simply put, it's unrealistic. It is unclear how much prices will decrease, but given the persistent lack of affordable housing, prices could be supported. The question is really how they'll decrease, according to the Housing Forum's Anne Clark, Director of Policy and Public Relations. Based on interest rates, economics, and projecting possible drops of around 25%, that might not actually occur. It all relies on how people respond to it. There are many people who are eager to buy, so if they do fall, the lack of housing does cushion the fall a bit. What will it mean if the UK property market collapses? Not everyone will likely experience a housing crash in the same way. People who purchased home in the last several years with a high loan-to-value mortgage may experience challenges and slip into a state of negative equity. Actually, only a fraction of people who are relatively wealthy are affected by the issue. According to Grayston, that doesn't imply there aren't mortgage homeowners in that group who actually need assistance, who face monetary risk, and who might face the prospect of homelessness. I firmly believe that those persons should receive specialized help. The goal of the focus assistance is to save those individuals, not to maintain the value of their properties. Clark concurred. They may wind up in negative equity if they took out a mortgage within the previous couple of years at 90 to 95% of the value of their homes, and their homes fell 10 or 20% in prices. If you can continue making your mortgage payment, you could worry, but nothing to worry about. You're in a terrible predicament if you need to move but can't continue making mortgage payment because you can't afford to sell the house and repay the lender's loan. Because they can't sell or relocate, these people wind up in a sort of a bind. You should be concerned about folks like them. A few first-time buyers who have saved enough money may be able to take advantage of the housing crashes to rush in and purchase their home at a discount. But those who are not intending to move into a new home or likewise unaffected by a property slump, however, if they have a mortgage, they may have a deal with increased interest rate. A property crash is, however, categorically negative for home builders. According to Clark, it might also affect future housing shortage. It happened fairly suddenly, according to Clark. Nobody anticipated a war in Ukraine, and it actually sets everything off. Many people anticipated the interest rate would climb gradually. They didn't anticipate a steep increase. Since things aren't working out, developers are filing appeals based on viability issues and arguing that they need to create less affordable housing overall because everything else doesn't add up. Otherwise, you won't be able to find any accommodation at all. Thus, the local council must agree. Housing associations are also discovering that if they construct a large number of homes for market sales to crop-subsidize social housing, those homes don't sell for enough money and they don't receive the necessary subsidy. Generally speaking, less homes are being sold while house values are declining. There will be company closure, downsizing in the industry, and a slow rate of recovery. That will ultimately make the housing shortage worse. In addition to apparent problem with the planning system, there are additional reasons why not enough houses are being built. However, one of those factors in the sector's ability to produce dwellings, more housing shortages are undesirable. 8.5 million people in England already lack access to the housing they require, according to the National Housing Federation, which asked for a long-term housing plan in June. In the case of a housing crisis, more space for social landlords to buy existing properties alongside community-led housing organization, according to Grayston, may help secure more affordable housing. In the local housing markets, Grayston continued, "We need to provide more rooms for other actors and the specifics of that will vary from places to places." Will the housing market in the UK crash? Please leave your opinion in the space provided below. To ensure you don't miss any more, turn on notification and click the subscribe button if you enjoyed this video. Adios!